There's something going on today that is exactly the same thing that happened the last time. In fact, the three last times, the only three times the market fell 50% or more. And I say or more because depending on what market you're looking at, it could have been a 60, 70, or 80% fall. And the same thing's happening today. No, I'm not trying to sell you some newsletter or anything. I'm simply showing you what has the similarities today. And no one's really calling it, I believe, what it is. In fact, people are luring you in to buy more stocks right now. So stick around, I'll talk about what that is. Hey everybody, this is RC Peck, and this is my weekly video where I look at the price charts. I want to know what the price charts are telling us, not the headlines, not economic data, but price. Because here's the thing. Yes, price can change direction, but it's the best indicator we have. And even if you're not in the market right now, or you own gold, or you own commodities, or you own stocks, or you don't, you own cash or bonds, if you own stuff, this matters because price is really what can reveal what's going on. So let's go over to price charts. So here's a price chart. It is DBC. It's the commodity index, and it's been going up for now over 2 years. That's not a normal thing. That's not like, oh, here it is again, commodities going up for 2 years in a row. That is indicating we're in the 1970s or the 2000s. Those were the two times in the last, we can actually go back to the 60s. So we can say now the last 6 decades where when commodities get into these long-term uptrends, that is a structural change to the world market. Everything is going up in price. And I want you to think about this. The last time oil, now I'm talking about oil right now, but the last time, I'll bring up oil right now. And actually, let me make this screen a little brighter. The last time commodities did this, decade-long-ish move was when oil started. People probably don't remember this. Oil started at $10 a barrel. And it ended, I have to go back a little bit more, and it ended at $147 a barrel. Between the two blue lines, basically oil was free at $10 a barrel. That was 1999. And the commodity run ended, the global commodity run ended with oil at 147. This time has a lot of similarity. Oil didn't start, didn't start at $10 a barrel. It started at negative $38 a barrel. Negative. Even if it was negative $1, it started in a negative territory, and now now oil is triple digits, and I believe it's moving back up to that 147 to test that price again. It would not surprise me if it went beyond that. Just like oil going to negative almost $40 a barrel, it would not surprise me if oil went to 200. So that's the world we're in. Maybe not the world we want to be in, but we have this cycle that the world moves in. Let me go back to just a 3.5-year time range. And the cycle really determines what happens with other markets, right? Other asset classes. And one of the main cycles is this kind of super commodity cycle where it stays the lead asset. As a reminder, you can really only put your money in stocks, bonds, cash, commodities, or real estate. That's it. Everything else, Bitcoin to semiconductors to rare painting, it fits in one of those categories. When commodities leads all those other major assets, that's a time of instability, and that's what we're in right now. And that's why we see, the S&P 500. It's in a downtrend. It's not falling off a cliff. It is now trending down, as you can see on the price chart. It's methodically trending down. It moves up, and when it moves up, guess what it does? It lures people in. It says, okay, it's over, right? The Jim Cramers of the world are going to start saying, hey, it's over. Get in, get in. Look, it's a short-term bottom. So you get a short-term bottom. The same thing happens, if you look at any growth index. Here's the NASDAQ 100. The same thing. It falls and then it goes up, lures people in like, okay, it's over. Thank God it's over. Thank God it's over. And it pulls people in. That's what the market wants to do. It wants to destroy the most capital in a bear market, and call it whatever type of market you want. With my clients, I always talk about the market of instability, which is what the market's in right now. There's a lot of instability in the market, and it's not just commodities. You have the yield on the 10-year treasury in the US, it's right around the 3%. And I've talked about this before, that as long as it stays, let me zoom out here, as long as it stays right at that 3%, that's not a problem. If you look at the screen here, the top blue line, well, actually, let me make it, the top blue line is 3%. The bottom blue line is 1.4%. If it stays right in that 3% yield, nothing happens. It's stable. The market, the yield market starts to stabilize, and maybe the yields drop down a little bit and bonds go up. But bonds themselves are in a bear market. Bonds are in a recession. Geopolitically, if you think about this across the world, how countries get along, absolute geopolitical recession going on the planet. Part of the reason is because commodities are going up, commodities are going up, commodities are going up, right? When you can't feed your nation or fuel your nation, bad things happen. So, you know, we do have areas of instability. It's going on with yield. It's going on with bonds. Bonds were supposed to be the safe place to be. I'll bring up bonds right now. And it almost doesn't matter what bond you're in, but that does not look like a safe place to be, especially considering, if you look, we're super zoomed out. Bonds are trying to get above the COVID low. Key trying to get above the COVID low. So we'll see. So this is the market we have. We have a market where commodities are moving higher. Oil's at about $115 a barrel. Almost all other commodities are moving higher. And people just don't know because they've never studied price cycles. And most things in life are cycles. They just don't understand how high commodities can actually go. And the higher they go, the higher commodities go, the more pressure the stock market's going to be on, the bond market's going to be on, the yield market. And just think about that. So we have basically 90% of stock markets around the world in basically instability mode, red light mode, what I call. The bond market's in red light mode. Most currencies are in red light mode. They're cutting their currencies. The Japan yen, the Japanese yen, Japan yen. The Japanese yen is doing the same thing. The Chinese yuan is doing the same thing, meaning those currencies are getting cut to manage those own countries' instabilities. So we're actually in a culture of instability right now, but we're in a market of instability with stocks and bonds, and depending on where you are in the world, currency too. And what we're left with is basically anything to do with commodities right now is doing well, and everything else is not. It is okay to deliberately be in cash. Okay, so let's do this. Let's land this plane. So here's the takeaway. Having 80 symbols and 70 of them being stock symbols and 10 being bond symbols is not making you safer. It's getting that big picture right. And the big picture right now is commodities are continuing to trend higher. They can go higher for years and years and years more. Oil can go to 140, 150, 160, 180. If oil can go to negative $38, oil can go in a lot of directions. And it's not just oil. Agriculture, softs, metals, they're all doing it. So look to the price charts and think of it more of a, okay, we're in a cycle of instability. How do you protect yourself? You can still make money, but you don't want to be looking for that quick buck in a market of instability. Thanks, guys. Let me know where I got it right. Let me know where I got it wrong or where you think I got it right or wrong. Leave those in the comments. If you like this video, like our other videos. And if you have an over-diversified portfolio, you look in your portfolio and you're just really questioning why your advisor has you in 50, 60, 70, 80, 100 symbols, maybe check us out. We manage money. We manage money in a powerfully simple way, a way that is followable and understandable, and you could transfer it to your spouse, actually understanding what you own and why you own. Check us out. You can check it out in the description. Thanks for being in my world. I appreciate you, and I will see you next time. Bye.